This is Tom Zuccaro. Welcome back to SEC Roundup. With me today, as always, is Nick Morgan. Hello, Nick.
Hey, Tom.
Today's topic is the SEC's cat, not a four-legged feline, but the SEC's Rule 613, which is the Consolidated Audit Trail Rule. The rule was proposed back in May of 2010, 2 weeks after the infamous flash crash, in which the market crashed in a matter of minutes. The SEC, after the crash, had difficulty determining the trade or traders that caused that to occur. So that's our topic today. We are honored to have two of the foremost experts on market structure and CAT. With us are Ken Bentsen, the president and CEO of SIFMA. Hello, Ken.
How are you?
And also joining us is the managing director of equity and options market structure at SIFMA, Ellen Greene. Hi, Ellen.
Hi, Tom.
So, Nick, with an introduction, tell us about CAT and some of the issues and applications which have arisen since the rule was formally adopted in 2012.
Well, Tom, as your citing of the year suggests, CAT has been a long time coming. It has been proposed, revamped, started, stopped, and so here we are in the beginning of 2023, and it's fairly far along. And one of the surprising things, and the reason we're talking to Ken and Ellen, is that a lot of people don't know about it, which is surprising because it is a database into which brokers put all of the transactions that happen. And it's for the purpose of allowing the SEC and potentially others to determine what happened in the markets on any particular day. But it's a massive database, and the database includes, among other things, some personally identifiable information of retail investors. And so it's a bit of a surprise that it's not more well known, although when this thing was going through the SEC sausage making, various parties and members of the public did comment, including SIFMA. I recall that in 2019, in fact, the ACLU submitted a comment on one of the issues we're going to talk about today, which is data privacy and the potential risk to retail investors' data that is created by having this massive centralized database. And so we thought this is a good time to check in on progress. Where is CAT? What's being done? What's going to be done about protecting the data privacy of everyday investors whose information has been swept up into this massive database?
Yeah, let me turn to you and ask you, from SIFMA's perspective, what are the questions and concerns you're hearing from your members? What's SIFMA's view on the rule and the current status of the rule?
Sure. And thank you again for having us. And also I should note that my colleague Ellen Greene is the foremost expert on the Consolidated Audit Trail. I'm not sure I would put myself in the same level as she is, but it has been something we've been working on behalf of our members in the industry and frankly our members' clients, their investors, for many, many years. The Consolidated Audit Trail, as you mentioned, was really in response to the flash crash. I think it's also viewed as an enforcement tool by the commission. Our concern, we've had multiple concerns over the years, and the first thing to note is our members have all of the responsibility, but none of the authority with respect to the Consolidated Audit Trail. We have to report every single trade to the Consolidated Audit Trail. We're ultimately going to have to pay for some portion of it. I won't get into that issue today. And most importantly, we're turning over our clients' sensitive information, their trade data, and as Nick mentioned, some of their PII as well. And yet, once we hand that data over, we lose all control over that data. So our members spend, probably at the end of the day, billions of dollars every year managing customer data and protecting that customer data. And no one will say that's an easy thing to do or that it's perfect. but they take on that risk. They have all the responsibility. They have all the control. Here we lose all control, but we feel that we still have an obligation to our clients, particularly our retail, all our clients, retail and institutional, and yet we have no control over what happens to it. And at this point, when the cat really stood up and the reporting started happening in summer of 2020, I guess the initial reporting, there are two databases, by the way, and the combined database may be the largest database in the world. There still are no rules around who has access to that data amongst the 27 or 24, Ellen, correct me, SROs, including FINRA, but also exchanges that are responsible for the cat. And so by one count, maybe 4,000 people across these multiple entities have access to that data. They can download that data. It's not clear what they can and can't use that data for. And to us, you not only created a target-rich environment for hackers and other bad actors, but you also don't have any rules around who can use the data and how and who can take it in, download it, do whatever. So we've been very concerned about that, as well as just the fact that they're collecting the PII. I'll turn to Alan this one second, but the thing that we for many years petitioned the SEC to say we thought there was a better way than taking the customer PII. We thought there were easier you could always go and get the data from blue sheets at the firms. You could have an expedited blue sheet approach. We gave them many ideas to do that because we thought that would be a better risk management approach to protecting customer data. SEC didn't agree with us, so here we are. But now what's incumbent upon the SEC is to put in data privacy rules. And the SEC has had pending since 2020, if I'm correct, a data privacy rule proposal, which is, we think on the whole is a pretty good rule. Ellen can go into detail. And that really is long overdue in being done.
So Ellen, let's turn to you. In this day and age when hacking is commonplace, and we know that even the SEC has been hacked before, tell us about the data privacy concerns and whether you think the SEC has adequately addressed them.
Thank you. And, as Ken alluded to, there were 25 SROs, including FINRA and the exchanges, and CAT was designed to have 3,000 users access that data. So in thinking about data security, it's really been of critical importance that we see the SEC adopt new rules, because the CAT NMS plan, we think, didn't have enough specificity in it. And it was really important to take that one step further to really put in new rules and requirements that would really limit the ways that the exchanges and FINRA would be able to access that data. So back in August of 2020, as Ken alluded to, the SEC did issue a proposal that was designed to issue this protections for CAT data security, and critically important, also limit the scope of sensitive information required to be collected by that proposal. SIFMA was very supportive of that, and the first piece of it, which was so important, was really narrowing that scope of data. When CAT was first designed, it was intended to collect your name, your address, your date of birth, your social security number. So it was really important that the commission kind of reapproach that and think about, given the environment we're in with so many cyber breaches, how could we, seek to protect individual investors? So we spent a lot of time working with the SEC. We sent in a letter earlier in 2020 before the proposal came out, and we had recommended that they collect name, address, but rather than your date of birth, which is a lot of information, limit that to your year of birth. And we spent many months working with the CAT processor on a methodology to convert a social security number into a secure, what's known as a CAT customer ID, which is a unique number regardless of what broker-dealer you're trading at, that gives CAT the ability to trace activity from one customer across the market and multiple broker-dealers. So those were all really important developments. In terms of the access to the data, we were also encouraged by what we saw, because the proposal prohibited the bulk download of cat data by the exchanges. And we thought that that was really, really critically important, because what happens is if the data isn't analyzed within CAT, and they use the phrase a secure analytical workspace or a SAW, if people start or exchanges start to take that data out of the CAT, what can happen is, we know CAT is a secure environment. They should have they should have a lot of protocols and procedures around how to protect that data. But the minute it's taken out of that CAT system, at that time, we don't know what the policies and procedures are. We don't know how frequently that data is audited. We really don't know what the controls are. Additionally, we don't know if somebody could then take that data out of the exchange or FINRA environment and put it into a third-party system. So there are really a lot of risks introduced. And as I alluded to, with 3,000 users, we really thought that it was important to keep that data within the CAT. And if someone like FINRA, given their role as the regulator, if they thought it was important to have ability to download that data, there is a process and an exception that they could seek so that they'd have that ability. Unfortunately, the proposal was put forth in 2020. It's now early 2023. And despite a number of follow-up letters, despite conversations with the SEC, including meetings as recently as late last year and early this year, the CAT data security proposal doesn't seem to be as high a priority as some of the other proposals that we've seen the commission put forth. We still do, as I said, spend a lot of time advocating for this. As Ken alluded to, the transaction side of CAT is essentially completed. However, the customer account and information system is slated to go live in March 17th. So we really do think that it's critically important that these new protections are in place once that occurs.
So it sounds like there's some real serious concerns here. And I'll add before we sign off, there's also enforcement risk. The Division of Enforcement recently announced an insider trading case that was developed through data found through their CAT system. So there's an enforcement using the system as well as other parts of the SEC. But with that, let me conclude and thank our guests. Ken, Ellen, thank you so much for joining us. Your insights are very helpful to our audience.
Thank you.
Thank you for having us.
Nick, thank you as always, and we'll see everyone back in the next SEC Roundup.